I hope it does. Yep. All right. So let's meet. Thank you very much, Ivanova. I'm Maxima. Currently, I'm working as a supervisor and chairman of pricing committee in Mars Incorporated. I'm responsible for pet nutrition. And you will ask why I'm talking about the stock markets since I'm the consumer and market insights manager, not the stock market specialist or the investment manager. I will dwell on that a little bit further. But previously, I used to be the interim head of econometrics research in PepsiCo. I was responsible for the CIS countries there, and I was working from Moscow. Before that, I worked at Unilever Turkey, and I was responsible for the Middle East, where I worked as an insights manager. And prior to that, I was the head of sector at GfK. I was working from Moscow and Nuremberg offices. And yeah, I'm the alumnus and the graduate of the year 2018 from the finance management class. Is there anybody from the finance management? I don't know whether there is finance management right now. Maybe it has split into some different classes. But anyways, the school is there. It's like we have to look up to the markets in our daily work. But before we start, I will just go through the agenda. So first of all, I will answer the biggest question I've asked myself. Why do I analyze the stock markets? Maybe you will find it useful for your future. Maybe you will find it useful for your study today. Who knows? Then we will come to the hottest topic, the Coronacrisis case. We will come from the roots to the current situation. I will make no predictions because it's the most, I'll say, doubtful thing in this situation. And then we will speak about what will lie ahead. And we'll speak about the trends. We'll speak about the things that we might face in the nearest future, maybe in the years when you will graduate university. So let's start. First of all, when we will speak about this, let's discuss the thing that defines the position I've always been to. I've been the insights manager for 10 years. And this is the thing that lies in the root of the profession itself, what the insight is. I know that it's a very popular and a very hyping theme. Most of people on the internet, they speak about the insights as the nature of the business. I know that soon we'll go into the stock markets, but before we start, the insight, it is a thing that lies in the inner nature of the things, right? It is a result of apprehending the inner nature of things and the ability to see into a situation. It is the thing that you will find beyond your emotions, beyond the feelings, and beyond any other political and social pressure that you might face in your daily routine when you will be working. It is the fact. And in our profession, it is the utmost importance to find the insight in the volatility of the world. And yes, the third point here says a very powerful thing. It's a power to see what is not evident to the average mind. So when you're the insight person, when you're an insight specialist or you're an insight manager, I hope the insight directors or VPs, you will always have that power to see what is not evident. You will see something that lies beyond the situation. And saying that, let's go into this corporate framework. We will discuss the crisis in this manner. So we'll split it into the three big buckets. Like it starts with the economic surprise. The economic surprise, mostly it's a crisis or a crash. Then we will find the insight there. And basically there's the third thing, which is called the corporate response. Sometimes you will use it to your own use. You might find it as a private action, but the framework remains the same. So first of all, when something bad happens on the market, you step into the area of the unknown. The area of the unknown, it's the panic on the markets, on the stock markets, the outside of your flat. And when you are stepping into that area of the unknown, the first thing is when you're trying to bear as little casualties as you can, is to find the root cause of the problem. When you find the root cause, you understand that nothing that happens for no reason. And you will find that we've been coming to this one for a long time. We will see it further on a number of examples, and I will show you that any crisis that has happened for the reason. Secondly, there is information asymmetry. I know that you might have studied it into the economic course. Information asymmetry lies into the essence of the market. The information asymmetry basically implies the cost of the things and brings the value to services and to the products. So when you are facing the information asymmetry in this particular manner, we understand what is unknown in the area of the unknown. So what is the general information asymmetry that led to the crisis? And then you will find the descriptive features. It works for the markets. It works for your daily work. For instance, you failed the examination and you step into the area of the unknown. Then you will understand the root cause. If you understand the root cause, it might be easier to get the better mark the next time. You understand the information asymmetry, which might have led to the bad mark. And to succeed, you will need the descriptive features. So descriptive features are the triggers for the further movement. So when you understand the features, you step into the understanding of the insight. And insights are very important because they are the ideas, maybe even very simple ones, but that do not lie on the surface of the problems. And they bring us to the acceptable limitations. Because when you're facing some crisis, you understand that you're limited to some things. And just to survive, sometimes you have to understand what your next step would be. So what the next steps and further actions should be undertaken. And right here, you understand what becomes the emergent response. For instance, if you own a huge company, what happens when you are being shut down? You think of sending people back home, maybe firing some of them or sending them to furlough. Furlough, it's a vacation, non-payable vacation when people are forced to sit at home. It comes from the military language, but it's used frequently nowadays. And then you understand and evaluate the potential losses. So when you understand the losses, you are really ready to go into the measurable outcomes. And this is where you start living the new norm. You know that we all heard this phrase that crisis is a time for the opportunities, but what comprises the time for opportunities? I think that it's my point of view that it lies from the underlying trends, which are being studied when you're studying the insight, and the area of the unknown, which implies the volatility and uncertainty. So in between of them, we find the opportunities. So let's start with the crisis. By the way, do you understand me now, or should we switch into Russian? Is it okay?
Yeah.
Okay.
Yes, okay.
This is fine. Let us speak about the crisis times, but we will start with the things that basically caused that very big unnerving situation. All of them started with the sell-offs. Sell-off is a situation when the markets experience the panic sell. We are speaking about the stock markets. And by the way, why am I interested in the stock markets? As it says here, all the major financial sell-offs were the harbingers of future economic recessions. So it is exactly the time when you have to be very accurate and very attentive when watching at the market, how it unfolds. It is that very time when you see the changing of the roles. It's like when the tables turn. And for me, as a specialist in the market research, it's very important to understand which companies would thrive after the end of the crisis, because they are being evaluated by the market players with very high esteem. Or some of them might be the losers and outsiders and will vanish from the market. We will see them in the next times, in the next slides. But we start here with the panic of 1857. What was the year of 1857? It was the time for the first ever global financial crisis. So we call it the economic surprise, the panic of 1857. it was a time when there was a gold rush. So it was a time when the western part of the United States developed rapidly. They started creating lots of railroads. And it was a time when the Crimean War happened. So there was a lack of crops in Europe, which allowed the American farmers send a lot of crops to Europe and to earn a lot of money. At the same time, it was that very time when first railroads appeared in America, and they started developing really quickly. So by that time, the whole western part of the United States was full of the railroads, and people who sold crops to Europe, they sold it like all of them. They had empty barns. They didn't have any resource, so they started investing their own money into the new lands so that they could grow even more crops. And they started the expansion to the east. And that very time, I'm sorry, to the west. It was the Wild West. So it's like they started going to the west. And it was that very time when they started expanding to California. Yeah, and it was that very time when they found gold in California. So it was the year of the beginning of the gold rush. And as you can see, the railroads, they started connecting the cities from the east to the west using the railroads. And everybody thrived. And but as you can see here, I've pointed out the monetary system failure. People started getting lots of loans at the expense of their houses, at the expense of their farms. So they lended a lot of money. And what happened, you know what the black swan is? The black swan is a situation of the market which brings the unpredictable actions that would naturally occur in the market decline. That very thriving economy was ended by the end of Crimean War. So Europe no more needed crops from the US. Russia restored its supplies and started selling it at a cheaper price. Second thing, the invention of telegraph. It was that very time when Morse invented telegraph and started connecting cities so that the information was for the first time in history started to unfold in a matter of several hours across the country so that people could understand easily what was happening during that time. And as you can imagine, people knew what was happening with the banks that went bankrupt because they couldn't sell more. And at the same time, there was the information asymmetry. The paper railroads, the railroads that actually didn't exist. So people started hugely investing into the railroads created by the crooks. So when it happened, when the information was dispatched from the western parts of US to the eastern, it caused the massive sell-off of corporate stocks, basically the stocks of railroads. And it was the very first panic sell that dropped the market by 99%. So the first railroad companies suffered huge hit. Most of them didn't survive. It doesn't mean that the railroads ceased to exist. They evolved, and right now, and by the beginning of the 20th century, America was prominent for this type of communication. But that time, railroads crashed and went bankrupt. And it was the very first panic that caused the first huge economic problems, because with the banks in the US holding the debts of the major companies from Europe and from the US, it caused to the problems with the agrarian sector. So the agrarian production was compromised in the southern states, and it caused the revision of slavery. So it was that very time when the US started rethinking about the nature of working with the slaves and using them. And it changed the economy itself. So the underlying trend was switching from the agrarian production and changing the course of the production. If I were in those times, I would have put my money onto those who would use, for instance, more developed tools for growing crops, maybe go into some meat, but basically wouldn't go into those railroads. Second thing is the Great Crash. The Great Crash happened before the Great Depression. It was the very first time when America understood that its markets were not that safe. So what was the problem? There was a zero control of the stock market. It was the time when people had lots of money. America's economy was really powerful, which led to the marginal trading. Marginal trading is a type of trading when you do not trade on your money, but you lend it from your broker. So you trade on the money that don't belong to you. And it is a very risky type of trading, but people didn't understand that those times. It was that very time when Joe Kennedy said that when, how it's called, a hairdresser knows about the stock market, it is a time to pull off from the stock market. It was a time when there were lots of consumer loans. And of course, there was low level of financial education. It was a black swan for that time. With the low quality of consumer loans and with huge and wide private investments in bad stocks, it led to the huge bubble on the financial market. And when the banks understood that they were no more able to carry those kind of resources that would cover all the expenses and the debts, it was the blow up. It was so huge that it led to the first nationwide unemployment for America. And up to now, it was a time when there was the biggest number of people who were unemployed, but we did it this year in the first quarter of 2020. So what was the outcome of that result? The Great Depression lasted for 5 years and it caused lots of massive unemployment and the cuts in employee counts. It crashed the foreign trade because the trust in the American economy was undermined. And it led to the World War II because it caused the recession across the whole world. And during this time was the demand for the authoritarian types of corporate governance. And it was the time when Hitler came into power. The third example, it's quite fresh, not that fresh that we have right now, but it's quite fresh. It's the August 27, 2007. It was the time of the mortgage crisis. The root cause was the insecure mortgage loans. And the mortgage loans are the types, these are the types of loans that you get to buy your own house. And the home sales in America, they rocketed at that time. They gave the loans to people without the income even, which caused a huge bubble. It is very similar to the mechanics that the Great Depression had, but it was already regulated by the banks. So the banks were covered partially by the reserves. So it was not like that totally. Nobody believed that loans and the mortgage loans would cause such a disaster. So lots of companies, like the one on the right-hand side, like Lehman Brothers, you know, that investment bank, they had really loose risk management. They invested a lot into the bonds that held lots of mortgage loans, which caused the bad asset control. So the companies invested in everything that had the mortgage loans. And it caused a huge depreciation of bonds. And when you invest a lot into the bond is a type of the paper which states that you are it's like you own a debt. You own a debt of the person who wants your money badly to buy something. And it is like the second type of the instrument on the stock market. Like you have the stocks and you have the bonds, stuff like that. It caused the bankruptcies of the rates. Rates are very interesting types of players on the market. It is the real estate investment trust, which is specialized in owning lots of real estate assets and paying up to 90% of the revenues onto the dividends. So a lot of people invested in this kind of rates. So people basically spent, once again, like they did in 1921, 29, they spent a lot, maybe all their savings on those rates, and they went bankrupt, which caused the crash of banking sector because they were the investors of those rates. And what we had out after that, the reshaped world economy. It was that very time when China, well, it grabbed the torch of the worldwide leadership in the economy. So it was no more a factory of the planetary scale. It was the biggest country in the world in economic outcome. And it was that very year when the International Monetary Fund said that it was the time for the emerging markets to succeed. Only 20% of the economic growth was coming from the developed economies. So 70% was coming from the emerging markets, mostly from China. And now we're coming to the Black March. Black March, it is the start for the long-lasting depression. I try not to be so pessimistic about that, but let's have a look at this situation. First of all, let's speak about the root cause of what happened. It was the hyperproduction and the excessive amount of supply. We will speak about that a little bit later, but just remember that hyperproduction is the root cause. At the same time, those investors in these hyperproductive companies, they didn't know about their non-sustainable growth. Non-sustainable growth means that those companies, they could thrive only in very comfortable conditions. When the demand is always growing and there is no need to hedge its assets. So this hyperproduction were very, very quick and rapid non-sustainable growth was interrupted by the black swan. Basically 3 black swans. First of all, it was the oil and trade war, and it started way before the COVID-19. Then we have COVID-19, which came into play mostly in March, basically. So that oil and trade wars, they started way behind that. And the third black swan is a very surprising thing. I find it interesting. It's internet communities. Internet communities dictated their conditions on the international governments to work out the solutions for the battles with the COVID-19. And what lies ahead? We will speak about this today. So it's like the economic outcome is still under consideration. Do you have any questions, guys? Is it okay? Okay.
No.
So, as we stated a little bit earlier, out of each crisis, we must find the insight. And I was not myself if I couldn't find the insight in this one. So let's have a look at the trends that led to the stories of successes. The very first financial crisis, what happened? Let's have a look at that as if we were looking at the stocks, because we're analyzing the stocks. There was a rapid devaluation of railroad stocks. Therefore, I would have sold the railroad stocks before then. And there was the need for communication. So like the response is the development of telegraph points. So the telegraph points during the gold rush, they were a really good story of success. But we're looking at that in the hindsight, right? A Great Depression, non-cyclical industries are on the rise. Let's speak about, do you know what cyclical industries and non-cyclical industries are?
No, unfortunately.
All right. Well, we'll put it very easily. Non-cyclical industries are the industries that are being in constant demand, no matter what happens on the street. For instance, you will always buy food, you will always buy the medicine and toilet paper. But I know I'm hesitant about the toilet paper because it rocketed during this crisis. But anyways, it's the non-cyclical industry. The cyclical industries are the industries that are mostly related to the times of economic successes, like cruise lines or luxury cars or maybe entertainment stocks, something like that. We will go into the stock analysis later on, and we will have them on the paper. But in here,
sorry to interrupt. Second year students, you all fail the course. You forgot what economic cycles are? Really? You don't know that? It's surprising. Okay.
We know it.
Mm-hmm.
All right.
Yes, it's a revelation.
Okay. All right. So the insight, it's a very silly one, but anyways, it was the need for entertainment. It was that very time when we had the two rises. The short-term rise was the rise of the singers. So it was the time when people could have invested into the music bands, but they didn't. And they invested in the Hollywood, but Hollywood had its peak in 50s. So it was not that very time, but it was the time when Hollywood was founded. So the best response would have been the stocks of the brewers. It's a very foul entertainment, but anyways, the rise of the brewers was definitely on the paper. So we're coming to the Great Recession, with very, very close to us. So we had the drop of financial stocks. So you should have got rid of all financial stocks before the crash. I know that nobody does it because they were on the rise. So the insight was the drop of trust in banks. And it was that very time when blockchain technology emerged. So if you bought your first Bitcoins there, you would have been the billionaires now. It was that very time when blockchain was invented, as well as crowd investing. So it's like the startups searched for the money in the crowds. And now we're having the Coronacrisis, and here are my assumptions of what might work. They are quite basic. I will go through the wider list in the end of the presentation, but let's have a look. Moving stocks. We see that you know what FAANG stands for? No, it's
No.
Facebook, Amazon, like Amazon, Facebook, Netflix, Google, and the fifth one I forgot.
Maybe Apple?
Apple, yeah, exactly. Apple, exactly. They comprise the 25% of S&P 500. S&P 500 is the index that shows the strength of the market. And they were the only 5 stocks that accelerated the market. So if you would have invested in these 5 stocks, you would have been very profitable right now. So the insight is that we all are very agile. We stay at home, we work at home, we study at home. So therefore, agile services are quite a solution. Anyway, we spoke about the agile services and about the e-commerce in our companies a long time ago. We spoke about them like 5 years ago, when there was the emergence of the delivery services from Delivery Club and Yandex. Who listened to us, right? So my personal perception is that when we are at the end of this crisis, they will listen to the insights manager more diligently. It's my quite personal point of view. But before we continue, let's have a look. Financial markets, they are not equal to the economy, right? So they depict the state of the economy, and they might foreshadow economic step changes. As we can see, if we had the time machine and went to the Great Depression, would have put all our savings into the brewery companies like Anheuser-Busch, we would have been not the billionaires, we would have been the richest people on earth ever. Financial markets are really hard to predict. So it's not a very favorable thing when you are trying to predict the movements of the market, but they are dependent on the facts. And we will speak about them in the next point of this presentation. But let's bear in mind that very diligent valuation, and it is a very significant approach. And the corporate strategies, like the moves of the big companies, they lie under this kind of valuation. And they will pay a lot of money just to understand what would be the emerging trends in the future. And therefore, when you're studying the stock markets, you understand that better. So it might be the easiest way to understand which trends would lie ahead of the situation, right? And you might get become very successful in the end when you assume this approach in your daily work. And so what are the features of the current crisis? And we're coming to the COVID-19 situation very closely. The nature of recessions, I'm sure that you are very familiar with this graph. I tried to draw it myself, but so every recession starts with a growth. And it is that very time when you find that something goes wrong. In our specific case, when we're speaking about the current crisis, it is the situation then there was a very huge pace of production with a vanishing demand. So people, they couldn't consume all the products that were produced. And at that point, the economy cracks. It starts the recession. Recession might last for a couple of years maybe. And then we have the depression. At that time, the economy changes. It has to reformulate itself. It has to rework itself. And then we see the rebound and the come back to the growing trend. But what is a recession? A recession, it is a very technical term. It is defined by 2 consecutive failing quarters when compared against the previous year. So it's like when you're comparing the fourth quarter of 2020 or 2019 versus fourth quarter of 2018. It's like at that very point, you might find that deseasonalized economic growth experiences something. Naturally experiences the decline, and then you get the recession. So we were really heading towards it, and I stole this idea from one of the YouTubers. I find it very amusing. It is a really nice guy. He has a channel. I will share it afterwards. And he found that there were lots of articles that were basically foreshadowing the current crisis. So the first reports, the first articles emerged even in 2018. So the very first one was dated in November 2018. Then we had December and August in 2019. It is not a conspiracy theory. It is the analysis of the market situation. So if not, it was COVID-19, it would be something else. So the markets were overheated. And let's see into the details. So the very first thing, it's the stumbling economies. You know what GDP is, right? It's like when we're looking at the countries, the top 4 countries in Europe, we find it that the very first slowdown emerged in the beginning of 2019, maybe. And it started in Britain, where it showed very weak results in second quarter in 2019. In Germany, in the end of 2018, when it showed 2 negative results, but they were not consecutive, so it didn't show the recession, but it was really close to that. As you can see, all the trends are negative. Italy, but we know that what Italy is, but anyways, they were really low numbers. The economies, they were not growing. The same thing for France. But why didn't we have the crisis at that time? Well, because of America. America, up until 2020, was record high in the number of consecutive months of growth. Maybe you had heard it. It was 121 months without recessions, without any stumbles, without any drops of the growth of the economy. And you can see here the comparison. It's really strong. It's the growth of 2.1 when the whole economy of Europe was going to 0 numbers. It is really huge. But if you look at the figures of 2020, it goes way below. It goes like 5% below 0, making it the worst month or the worst quarter in American history. And at the same time, when the crisis was unfolding, we see the production stalls. I mentioned that when you are analyzing the stock market, you have to be very careful and attentive to the trends that are surrounding the stock market. When you're analyzing the stocks, you analyze the background situation which happens in the markets where companies are operating. These 2 things, basically it's one thing, it's the PMI index, it's the Purchase Managers Index. It shows the activity and the sentiment purchase managers. Purchase managers are the managers that basically purchase the produced goods from the manufacturers so that they could sell it in retail. And you can see here that it fell. And it started falling way behind it. You can see here that the trend was negative in Europe. It was driven by Germany, it was driven by France. And the worst thing happened in China. It happened in February when COVID-19 appeared, and you can see the rebound, right? It's like the sentiment goes even higher than it was in January. But Chinese manufacturing, it trailed the whole world because of COVID-19. But before COVID-19 emerged in China, we had the oil war. And you remember those figures? I have those screenshots. I will show it to my grandchildren. The oil, which costs less than zero, and it costs like 3 times less than it should have done, multiplied by -1. So it's like it's the futures contract. I know that it doesn't show the actual price of the oil. It's basically the CFD. It's the contract. It's the futures. But anyways, the oil deal failure, which was made by the OPEC plus organization, it was the final trigger for the economists to start slowing down, or basically jump into recession. And it all led to the Black Mondays, basically 2 Mondays and a Black Thursday. You can see here the most painful graph in my life. As a private investor in American markets, stock market, I've experienced on myself these 3 big drops. It started on the Monday, it's like Monday, the 9th of March, with a drop of 12%, 8%, I'm sorry, 8%. And then on March 12th, it dropped by 12%. Then we see the technical rebound, and it collapses once again. It was the biggest drop in the history of the United States, and it was the fastest drop in the history of the United States, which led to the bull market. You know what the bull market is, right? No? Basically, there are 2 types of markets on the stock market. They are very easy. It's like the bear market and the bull market. How we can define them? If we're speaking about the growing trend, then we're in the bull market. It looks like the bull is attacking someone with its horns and pulls it up. The bear market, it's the contrary. It is the market when everything falls, and it repeats the attack of a bear because it attacks from the upper side, like that. It's like it puts its paws on the head and it tears it up. So this is the situation when the bear market emerged. It was killed by the bull market, and right now we're in this very tricky situation because the whole world is awaiting what will be next. Will it be the next bear market, which will go even lower because the markets are still overheated, as you can see. It's not even on the 2016 levels, or it might go up to the new historic highs, and we will discuss that a little bit later. One of the most painful pictures I have in my cell phone is the total market, all the players of S&P 500. And you see the green area, it's Gilead Sciences, the company that works on COVID-19 remedy. They are very prominent for the medicine called remdesivir. It was used for the Ebola curation. And then we have a Kroger, which was bought by Warren Buffett, exactly at that time. And that's it. All the rest are red. And there were some others. The basic materials, 2 of them didn't fall, but they would fall the next day. The rebound. The rebound, you saw it on the graph before. It was the fastest rebound ever, and it had the reasons for that. I know that you might have discussed it on during the economic classes But when you're speaking about the types of remedies for your economy, you might introduce two types of tools. You might give it until the ongoing inflation by injecting the money. It's like the monetary help, or you might give it into the market to decide itself whether how it can come back to the norm. The second way is the most painful, but it looks the most natural. The very first one causes hyperinflation. It's like when you inject money in your economy. It works for the economies with really great potential and strength. Unfortunately, it works for most European and the US, European countries and the US. It doesn't work for Russia because of the nature of our economy. But it was that very time when Federal Reserve, Federal Reserve System, they printed out like $3 trillion to help out, to create the bailout for the economy. It was called the quantitative easing. Quantitative easing is basically that injection of the money into the economy. So that the banks started buying the stocks, they started buying the bonds of the companies that were failing, and they also started giving the money, the state money, to the countries, the corporations that suffered mostly. Basically, these were the airlines, these were the manufacturers that were serving the airlines and entertainment, I don't know, retail, any other types of affected industries. I would say that the only industries that were not affected were either the information technology sector or the grocery retail. The others suffered badly. So the worse the businesses were, the more money they got. That works specifically for the case. So it's like when you have experienced a lot of losses in your capitalization, you ask for kind of help. And at the same time, government really injected this money. But what was the cost of that, right? So you have to prove that your company is experiencing the problems, and that you have done all that you have done. For instance, you might send people to furlough, right? It is the easiest way because you do not fire them, but you might fire them all, and that will cut your cost, and they will still get the money. And the markets, that rebound happened when the markets understood that that was the mechanics behind the prosperity of the companies in the very short term. And the worse companies were, as I said, the more money they got from the investments, from the private investments, because they knew that those companies, specifically those companies, those losers, were covered with the economy itself. I'm speaking right now about the markets, European markets, about the American markets. I'm not speaking about Russian markets, because Russian markets are somehow different. I hope that we will be able to talk about Russian stock market the next time, maybe, because it's a really interesting market. It's partially owned by the government. Maybe it's on the 60% owned by the government, or even more. So there was no need for the government to inject that much money in these companies. But for European and Western markets, it worked like that. And the markets, they started waiting. So it's like they started waiting for three big things. It was the end of lockdown, the creation of the vaccine, and the OPEC Plus deal. And OPEC Plus happened, so the rebound happened. Then we are waiting for vaccine, and we're waiting for the end of the lockdown. Before that happens, the markets would grow to some extent. But when all these three things happen, I think, it's my personal opinion, we will see even the bigger crash of the markets and the economy itself, because all the monetary remedies were undertaken, all the measures were taken, and the Federal Reserve, it basically has nothing to introduce. They can lower the interest rate to the zero. They might make it even negative one, but it will not help the economy because it suffers from the economic factors. But if you are the investor and if you want to find the stocks for your future portfolios, it is the best time when you can start looking at them and maybe buying them. I'm not dragging you into that one, but you might try. What was so special about the crash? As I said, the markets lost almost 8% in the first time and 13% on the second day during the 2 8-hour trading sessions. It was the fastest loss of the capitalization the markets have ever seen. Dow Jones index, its trades were stopped 2 times on the second Black Monday because of the rapid speed that the acceleration has gained. The rebound of the markets happened in 2 weeks' time as well, so it makes that, as we said, a bull market, and it looks really weird, right? So it's like, this weird recovery seems to be very, so to say, like, I don't know, the markets look ill, right? So they look ill after the 17 days after the crash, they rebound that quick. It took the American economy 5 years to restore to these levels, but now it is only 17 days. And the rebound, we're still thinking about it, whether it sets or it doesn't set the bullish market. I put it here like it doesn't set, but we might discuss it later. So we're coming to the end. The third point is what will be next, right? So let's discuss it maybe. First of all, the most important things that we all are thinking about how the world will recover. Basically, International Monetary Fund introduces 3 big scenarios. You might find them very familiar. The U-shape. The U-shape means that we have peak in May and the return to normal in autumn. But this new norm is quite abnormal, because when you get the end of lockdown and people return from the furloughs, they won't be able to, for instance, to go to the cinemas more than 50 people in one hall. You might not go to any entertainment parks. Maybe there will be no concerts. Definitely there will be some problems with the airline sector and the cruise sector. So this is a kind of recovery which is considered to be the basic scenario for the whole world, but it shows positive dynamics. But it is a very ill dynamics. But once again, it is the basic scenario for the markets. The W shape, it's the cruelest scenario, I think. W shape means that we have the rapid recovery right now, or we go to work right now. The virus returns, people once again get ill, but they have the immunity and they can once again return back to work. So we have no restrictions, we have no limitations to our daily work or daily life. The scenario implies the thing that everybody should become ill and to gain the resistance to the disease. So this is why we have those W-shaped dynamics for the markets. Personally, I find it very entertaining and very unnerving. So as a private investor, I would never dream of these kind of scenarios. And the V-shape, it's the most favorable. It means that we have the quick recovery like in China. As you saw it on the slides earlier, China has recovered in 1 month. And people, most or maybe all people have the immunity to disease. And the economies are back in normal conditions. It means that once again, we have no restrictions, but we are not ill once again. So there is no second pandemic time. And so let's have a look at the areas that might be, intentionally, I didn't show the companies because the companies are very diverse all in the world. So it's like I'm not the advocate for specific companies. It's like the sectors and the sectors where you might find those insights, maybe in 5 years time or 3 years time, that will be really strong. from now on. So it's like saving is not typical. As we said, it's like the cyclic, non-cyclic industries and communications and internet. By the way, if we're speaking about mobile communications and internet, remember that red picture with all the stocks, it showed that there were not defensive assets. But at the same time, during the contemporary crisis, mobile communications, these companies are the strongest ones. So they don't fall that strongly during the crisis times, and they recover very quickly. On the contrary, the ones that will lose a lot, those are the traveling companies. So like traveling, the cruises. I'm constantly repeating the cruises because there are a number of cruise companies on the stock markets that are struggling right now, and a lot of people, they try to buy these stocks thinking that they will rebound to the heights because they've lost approximately 90% of their value during this crash. But traveling is one of the most rejected types of time spending and money spending right now because of a number of factors. You know, that people, they lack a lot of, well, first of all, they are being afraid of the COVID-19, right? Secondly, most of them have lost their jobs, or they are struggling with the current conditions. So traveling, and we basically have the restrictions applied by the international governments. And then we have the more interesting things, like decrease of purchase of the real estate, cars, and computer appliances. It means that you can do two things here. You can buy a flat very soon because the prices will drop down, or you might invest in the companies that are related to this real estate or automotive business. And you can see here, and it is quite interesting, less expensive. So people are switching to the less expensive types of time spending and money spending. They still go into the hobbies and still go into the sports. And well, when the quarantine is ended, people will still go into the sports. Most of them will try to pump up before summertime, unless we have the lockdown by the end of summer. So these are the companies that might be of highest interest in the short term. And then we have something in between, right? So we have the companies and the businesses that are in the level and in the area of uncertainty, right? So these are the companies which produce smartphones, TV sets. You might find them very familiar, right? Apple is among those companies that were driving the S&P 500 to the heights, one of the biggest companies in the world. And it is in this very area of uncertainty. So at these very desperate times, people might start saving the money and not buying the types of things. So it might be quite of use to find what happens to the companies here. And speaking about the stock market, there are lots of stores there on the stock market. There are lots of manufacturers. We call it consumer electronics manufacturers that would buy would produce smartphones and DIY things. Well, first of all, like Samsung is really struggling right now. LG and Apple, these three come into mind the first time. On the left-hand side, you find the petrol, and this is where this mapping goes along with the market itself. I didn't put the graphs of the companies on the slides because it would make the presentation really long. But the oil producers are right now under the pressure because of there are two reasons for that. First of all, the oil prices, and the second one is the end of production, right? So when the production recovers, you will spend this petrol on your cars, you will spend your petrol on the production of these very guys, So they might go up, and it means that the whole industry has recovered. So this is my proposal. If you find it interesting, if you find it useful, we might go through the companies themselves. I will create kind of cards later, and we will analyze them as we did in our financial management classes, but maybe in a more down-to-earth manner. But it's up to you to decide. And then we have, is it like that? No, we have the trends in the last part of the presentation. I know that it might be sometimes even look dull. So first of all, it is still hard to find the trends, right? Because the situation is still unfolding. We are still in the area of the unknown, but let's have a look at the winners. As you can see it right now from the reality that surrounds you, it's the retailers, non-cyclical producers, and material suppliers. Material suppliers are the ones that produce copper, for instance, or the other types of commodities, and technological giants right now, because Netflix is gaining a lot because of the lockdown, because of furlough, because of the stay-at-home manner. The short-term and the mid-term gainers are definitely the stocks that are related to the online delivery services and all the industries that are related to the online services. All types of automations, like we have it for Zoom. But Zoom is a compromised stock because of that leakage of the personal data. But anyways, these kinds of companies are on the rise, and all types of home entertainment, right? So it's like the ones that would substitute your outdoor activities and your normal hobbies and behaviors like you were in normal times. And the long term, I think that these are the most desired types of insights when you have to invest into the long term. First of all, it's like the recovery of all leisure and fashion businesses. Maybe they would change. Definitely they would change. But anyways, the sports events and sport companies, and of course the sports activities. So it's like the sports for people and the sports for the professionals. These are the two areas that would recover in the long term and will bring a lot of money. And I think, yes, that's it. I hope that it took only an hour, so I'm open to your questions.
Thank you very much, Maxim. It was so informative and inspiring and enthusiastic. You really got all of us into your presentation. I think we are all infected.
Thank you.
Yeah, I have the questions personally, but I would like to give you guys the time to torture Maxim. Yes, he is here now with us to ask all your questions that might arise. Please.
Yeah, I have a question. First of all, for your presentation, and my question is what we should expect from the central bank during the recovery of economic, maybe it's the economy, maybe it's the percent range, they will change it or something. What we should expect? So
it's a really great question, and it is a question which is being asked to Elvira very frequently, right? And well, first of all, I think it's the decrease of the interest rate. I think that they already done it. They decreased the interest rate by 50 basis points from the beginning of the year, and they will continue doing that. So they can inject a lot of, well, they might use it for the use of the small and medium businesses, giving them the cheaper money. Second thing that they might do is they can start buying back the loans of, not the loans, but the bonds of the companies. And I would really cherish that idea, because there are lots of corporate bonds that are being undervalued, and I think that in this situation they are being left over without the support, and buying those bonds like the American administration does, I think would be the greatest action. I know that there is the idea of helicopter money. I know that you've heard about the helicopter money, right? It's like giving everybody money.
Yeah,
just to give everybody,
yeah. I don't think that this is a great idea, not because I'm a cruel person, but because of the lack of economic impact, it causes us 5 trillion rubles, and at the same time, it doesn't give us the result that it should. I would have given this 5 trillion rubles to the companies that work like legally and that are really trying to succeed in their business, like not to the companies, to the group companies, right? That would take the money and get away from the market. So I would have, on the place of the central bank, I would have given the private banks this money, and then the private banks would dispatch it to the companies themselves. And the third thing is, I think that I would have, well, this is the worst thing. I know that everybody would hate me for this kind of idea, but I would have lowered the exchange rate for ruble, right? So it's like right now, central bank spends a lot of money on supplying the levels of the X rate for ruble versus dollar, and it costs us a lot, right? If dollar becomes 100 rubles, we will be even more prosperous than we are right now, because of the incomes because of the taxes from the oil producers, because of the taxes of our exporters. But I know that these 3 ideas are maybe the worst ideas someone can say on the internet. So I'm really open to agree with it.
Unpopular, yes, unusual, unpopular. Thank you very much. Nastya, please, Anastasia.
Yes, hello. Thank you very much for your presentation. Actually, I did some research on the coronavirus consequences in Russia and the potential scenarios in Russia. And there is an idea of the L-shaped recovery.
The worst one.
Means,
the worst one.
Yes, which means that the growth won't happen like in years. And is there such an opportunity in world economy?
It happens if people are still locked in their houses. If the countries do not open up in a couple of months, then we have the L-shaped economy. Definitely we'll have it. Because every time of lockdown, every month of lockdown means that GDP loses up to 5 to 7% of the GDP growth versus previous year. And if it happens like that, then we will see 2 biggest outcomes. The first one is that definitely there will be a lot of unemployed people, right? Like we have it in America. You've heard about the record high amount of filings for unemployment. Second thing is governments will have no taxes, and zero taxes mean that there will be no support for first of all for culture and education, right? And then we'll have the medical services cut, the foreign defense cut, and we'll be in a disaster situation.
Oh my God, increased rate of crime and so on. Yeah. Negative scenario. Let's postpone it. Hopefully it won't happen. Please, any other questions, guys?
As for me, I didn't understand everything, but it's really interesting. Thank you, Maxim, for this actual topic, and thank you, Rozana Matsumovna, for this opportunity to improve ourselves. I think that is useful for everyone and for every students in our faculty.
My pleasure.
Thank you very much. Please, Antonina.
You talked about any YouTube channel? You meant My Gap, maybe?
Yes, it was My Gap. And there was also the second one. The second one was, you maybe know him. Let me say, it's Hulinomics. Do you know that guy?
Oh, yeah, yes, I know. I know.
Long-haired guy. Yeah, he's perfect.
Yeah. And because I saw this video, I watched this video about crisis and about.
Yeah, I took it from there. Yeah, so
I understood that. Yeah, I really like this channel because they have very full, I can say, really full vision of a lot of things, and they are neutral for many political situations. They say the truth, in my opinion. And also I wanted to ask about what you also talked about maybe decrease in central bank rates.
Yeah.
But I heard the idea that our central bank can decide to increase the rate to stable our exchange rate, ruble exchange rate.
That's what they
do
will
you think
do,
about it?
Yeah, that's what I said. It's like if they keep the exchange rate, they will have to do that gradually. And what we'll get? We'll get expensive credits, we'll get the unbearable mortgages, and we will get the businesses that will die naturally because of the very expensive money. So they might hold the exchange rate, right? So it's like we might be, if we save enough money, we can travel easier. But that's the only thing we might find useful after that.
But why it's so important to fix to spend a lot of money on our ruble exchange rate if all our borders are closed, if we don't have any connection, and so on?
It is a good question. It is because we import a lot of goods from abroad. It's because we have to buy lots of things, starting from the, starting from iPhones or the telephones, ending up with the commodities and the raw materials that that we get from China, from other countries. Well, we might fix it with China. We might fix the X rate against yuan, but at the same time, if we increase, if we lower the, I'm sorry, we will fix it. So it will cause a lot of disorder, maybe, with people unhappy about the inflation and their lowered salaries. So they won't be able to buy the things that we were accustomed to.
Mm-hmm. Thank you. Any other questions?
Thank you.
Mm-hmm.
Yes.
Please.
I have some question.
Who said
Yeah.
yes? Oh, okay. I heard a girl first.
Okay, yeah,
Girl.
sure.
Ladies first. No girls, Anton, then it's your turn.
Here.
Well, thank you for your presentation, and I didn't really understand why are internet communities one of the black swans of coronavirus, corona crisis. What do you mean by that?
It is a really great question. I think that everybody admitted that one when we were speaking about corona crisis, but the very first reaction from the governments was to make everybody, well, first of all, get the disease and then to recover from disease and to gain the immunity without the lockdown. And it was the criticism of internet communities that started that massive breakout of the ideas that people should be at home. Mm-hmm. And that it was the very first time in history when people started moving the decisions of governments under the pressure of internet communities.
Mm. Mm-hmm. Thank you very much. Anton, you wanted to ask something.
Yes, I want to ask Maxime, what business will survive after coronavirus crisis?
Well, the easy answer is the agile business will survive. But if we say a little bit in more detail, then we'll have, first of all, those that are related to information technology and to the agile technologies. Secondly, we'll find, the old-fashioned types of business that would work every time. It's like those that are non-cyclic industries, like, I don't know, agrarian production. Like, you know, there's a company which is called Archer Daniels company. That I know that it doesn't sound familiar to you, but they are the producers to all the major manufacturers of consumer food packages or packaged food, like PepsiCo or I don't know who else. Nonetheless, like that. Thirdly, I think that those that would adapt to the lockdown situations, like the ones that they would provide the, well, basically it means that, well, the businesses will survive if they're being helped out, right? Even the cruise companies will survive. I'm constantly referring to the cruise companies, but they suffered the worst and they will recover the last, right? Even they will survive if they're being helped out. But I think that the businesses that will not survive are the ones that are not cooperative, like they are not working with the government itself, and they're being given that hand with the bailout. And the ones that are not agile, if we're speaking about sticking to that unsustainable growth model, right? It's like if they have lots of costs of production, if they, even if you are a producer of some, like I can imagine like TikTok had lots of overhead costs, they would also not survive the crisis because of the cost. The revenues might rocket, but at the same time, they are not a sustainable business. So if they do not adapt their business model, they will not survive. So I think that would be the answer. I hope that I answered your question.
Thank you very much.
Thank you.
Kushina, I saw your hand. You wanted to ask something, please.
Yeah, thank you for your presentation. So I have one question. So what do you think about government support to, for example, private sector or to some people? So are the government doing everything right? Can they help our businesses? Can they help our people as much as they can, or not?
I'm being recorded, right?
We will erase that, Maxim.
I think that our government tries to do its best, but not everything happens. They could have helped the businesses in a better way. It's like, from my point of view, it is much better to give the money not to the real estate developers rather than to the small businesses that, for instance, like, I don't know, barbershops. For me, it's a very important thing. But I doubt that they get the money from the government right now, right? And people will still retain the demand for the barbershop services rather than real estate. But barbershops, they don't get the money rather than real estate. At the same time, those developers, if you notice their advertisements, they are still trying to impose not the discounts, but they try to drag you into the faster and the quicker deal on the flat consumption, on buying your flat, your apartment. I doubt that they are doing the right thing about that. Also, I doubt that they're doing right thing about the measures that are being undertaken on the businesses that are struggling with the rents, right? They still have to pay a lot for the rents, and they are not being helped out on this matter. They are being helped out on the operational costs, and I know that rent fare is also a part of the operational cost. But if you file for the state bailout, you will see that they cover only 30% of your costs, and the rentals, right? It's like the people who give you these areas, they are not being helped. And so on the other hand, I would have helped those guys just not to impose the rent fares on the small businesses, because they are still losing money out of nowhere. So maybe like that.
Thank you very much. Leonid Kiryanov, please.
Yeah, thank you, Maxim, for your presentation. you said about some case scenarios of economic rebound, and which of them, in your opinion, is the most possible? U-shape, W-shape, or D-shape?
Or L-shape, right?
Or L-shape, yeah.
I think U-shaped. U-shaped would be the most realistic scenario. It is not the best case scenario. So we will have the consequences. We will find the consequences because we will be limited to our daily routine. We will have a lot of restrictions in those spheres that we still right now cannot understand and assess in ourselves. Like we still are not that very conscious about the things that we will lose in 3 months' time, in 5 months' time. We will not be in the same world. Again, I know it sounds harsh and at the same time very epic, but the situation will change in that U-shaped rebound manner. For instance, there are plans for us to be locked down at houses by the end of December. So we will work from home until the end of December. And we are not working with people mostly, we're working in the offices. So you can imagine what will be the economy if most people do not spend on transportation system or in the snacks.
Yes, sounds
Thank
spooky.
you.
Yes, thank you very much. Nastya Cheripanova, please, your question.
Good evening, Maxim. Thanks a lot for the presentation. It was super informative. And my question is connected with what you've mentioned about investments. I'm not an investor yet, but I hope to get into this topic soon. And I want to ask you about some suggestions or tips for beginners. Maybe you have some YouTube channels again, or
well, first of all, I think that you should start with the books. You know, there's a Sensible Investor by Robert Graham. Then definitely, yeah, there are YouTube channels that you might find interesting. For instance, Invest Future. It is a really nice YouTube channel. I don't know, well, it is not the explicit, it's like the word, the channel is called after the hooliganic economics, but they merge it like hoolinomics. But it is a really nice channel from the economist, the contemporary economist, who has created the book. He has written a book about the current economy and about the investments, mostly about the investments. Third thing, I think that if you are trying to invest yourself, the best thing is to open the demo account with the fake money and to select the stocks so you can start buying them on the fake money and see how it unfolds. Because once you do not start, you won't get the grab of the market. You will start analyzing the indicators, you will start analyzing the balance sheets, you will start analyzing the competitors, you will start analyzing everything which surrounds the stocks. And well, I was thinking about putting specific tips for investors, but it would take another hour of time. So I didn't, but I think these quick tips might work.
Thanks a lot.
Thank you very much. Kira, I saw your hand. You also had a question.
Yeah,
Please.
well, returning back, thanks a lot for your speech. It was really informative. And talking about, yes, this crisis or consisting of COVID, do you think that all the measures which were undertaken about COVID are acceptable, and whether the economic crisis which will influence us because of these measures is not, I think it would be much worse than the COVID, what we are having right now. Like,
it is, yes, it is
yeah?
going to be worse, of course,
Do you-
because of the,
Yeah, do you think that all the measures which were undertaken, they're obligative and they're normal, they're okay? Or it would be better just to live our normal life and continuing to suffer, to somehow just suffer and just, I don't know,
trying to find the vaccine without all the lockdowns.
Like Swedish scenario, yes,
Yeah.
because Sweden is not locked. Yeah, they still live their normal.
They are
I
happy
remember, yeah.
people. But I think that the measures were okay. The measures were timely. Maybe we still have that increasing number of people who have been diseased, but the measures were fine. And I like that they were coordinated. So if you look at the speeches of Trump and Putin, then you'll see that they are, first of all, they're being taken on the same day, and they're very similar. So it's like they are coordinating it the similar way. So they started it in lockdowns and they continued with the open ups. But I think that on the pandemic case, I'm not a scientist, I'm not a doctor, but for me it works fine. So we don't have. So if we were not locked down, the spread of the disease would have been much faster, and that would have affected the medical services department, the medical branch, which would cause people without illnesses, with with little illnesses, not taking the care that they should have taken.
Okay.
Oh my God, yes. Thank you very much. Masha, your question, please. Maria.
Hello, Maxim.
Hello.
I really liked your presentation. So I have two small questions. Firstly, how did coronavirus influence you as a worker? And the second one is, how did coronavirus influence your company? Maybe there are some events that help to adapt to these situations.
Thank you for the questions. Well, first of all, I've never worked so much as I do right now. We don't have the working hours anymore. It's like you get up at 8 and you go to bed at 11, and all the time you're working. So these are the hours of total disaster if you're speaking about the working conditions. And I'm really missing my colleagues because I'm an open person, so I need to get people not from the internet, by the internet, and just like shake hands and drink beer. I don't know. It's very important because you can communicate. So I don't have that communication right now, and I'm missing it. But apart from that, as a worker, nothing changed for me. So besides working harder, nothing changed, hopefully. So it's like I'm a very lucky person about that. And it brings us to the second question. Why did it happen so? Because we got a lot of benefits from the coronavirus, very abnormally. But we produce the pet nutrition, and people do not, they do not save money at the expense of their pets. That's how that's how they behave. And you know that it is the third expense area where people still keep the investments. It's like themselves, like food, then their babies or kids, and then the pets. So we had the record high sales in the first quarter, and it was a great luck for us because otherwise people would have selected something else. But well, from this perspective, we are in a better position than others, and but it doesn't make me look like I'm better than them. Our company is better than them, because in other circumstances, for instance, if there was something related to animals, we would have gone broke, and nothing would have changed it. So yeah, thank you, my employee, for that one. Employer.
Thank you. We're happy for you. Thank you very much. Yeah, at least someone gained from this crisis. Yeah, but it sounded really spooky when you said that you have plans to work from home till the end of December. Oh my God, I heard some kind of speculations that probably September will start on distance. But I thought that these are gossips. But guys, you see, things might really
These are also
like
gossips.
that. Yeah, as for me, it's unbearable right now, because as Maxim mentioned correctly, so the workload rocketed. I don't know why, but sitting home, the workload is absolutely unbearable. So in comparison to traveling to work and this time spent on the trip, it's inexplicable. I would stand in jams and in this rush hour in the underground, so everything is fine. But going to working from home is a disaster. But better this than nothing. Yes, if we compare to the number of the unemployed. And also, I have a question, a provocative one. Do you think, Maxim, so even if it's recorded, so don't mention it, we will erase it. Do you think that we are all marionettes? It's like a written scenario that we are all living in. And it's all guided by someone else, because there are so many conspiracy theories that just come from all networks. Yes, you just switch on YouTube and you listen to some absolutely abnormal theories that a human might imagine. Like we are going to be, so Bill and Melinda Gates, they're having the charity, we all know that. And they are developing the vaccine, which sooner or later will be a must for everyone. And without that vaccination, we won't be able even to travel and get some job, and so on and so forth. So this is a well-made plan for us to be controlled and better monitored. Yes, like cheap injection and so on. Do you think that there is some kind of truth in all that?
Yeah, it looks like that. It definitely looks like that, but I think that it isn't, for several reasons. First of all, we've had those wealthy years, and if it was not coronavirus, then we had something else. If we're speaking about specifically the economic times. So I know that there were conspiracy theories about the capitals being moved from one hand to another. So we are parking it there, right? You were speaking about the eradication of the total, like millions of people, billions of people. It surprises me to hear that, if we get the statistics from American government, then most of people who are being affected and that die naturally are Hispanic or Black, right? It looks like people are trying to kill them. But I think that the reason for that is that they normally don't have the treatment and don't have the resources for treatment, and are not being tested like other people are. And if we compare the two countries, for instance, the wealthy country and the poor country, then on the first stage, we'll get more people diseased in the wealthy country because they have better medical conditions, and then they have the research facilities. But then we will find that the second country, which was not diagnosed for coronavirus, instantly starts losing people. I'm not trying to find this country, but it looks like it's really close to our borders. But so that if you do not invest in that kind of treatment, you will definitely get better eradication. So it's not like, I think that it is the problem of finding the cause and effect. And the cause is that there is money and there isn't money. In our case, the number of tests and the number of facilities to cure them.
Mm-hmm. Thank you very much. Yes, comprehensive answer. What else would you like to ask about, guys? Please, you have time and an opportunity. And also, Maxim, you mentioned that probably next time something is going to happen. So you will join us, yes, hopefully, once again.
If you invite me, I will gladly join.
Yeah, and we will choose maybe some very interesting topic and rejoin. I hope that everyone really enjoyed this opportunity and this experience. I think it was extremely successful, and actually the connection was fine, so everything was just perfect. And also you said it was just pre-last slide, I guess, that in case students would like to discuss and present some detailed analysis of the cards like you did at your classes, finance, something like that. So I cannot exactly, I cannot interpret it exactly what you said, but you said that maybe you can discuss in detail some of the aspects on this slide.
Yeah, I think it looks exactly like what Anastasia asked me about the specific tips for investments. And the very first step towards the investments is due diligence that I don't know whether there are people of the third age or third year of education.
We have third year students here, but we have masters. We have masters.
Ah, masters. Okay, you might have had it on your financial management classes, the due diligence studies. So you might be very acquainted to that. So it's like that. So it is a mixture of due diligence on the one hand side. On the other hand, it's the analysis of the indicators and the possible movements, or I don't know, possible actions with these stocks. So the very practical one.
Okay, then if we don't have any more questions, I think
I ask a question, please?
Sorry?
Please? Can I ask a question, please?
Yeah, sure, Serежа, please.
Thank you for your presentation, Maxim. What should the government do with the total unemployment in case of the current crisis?
I think that they should do the same thing that Franklin Roosevelt did in America and send them to the governmentally supported jobs. I think something like that.
But they are locked down in their houses?
I mean, when the lockdowns are over.
Oh.
Yeah. Okay. Thank you. That's it. Once again, thank you very much, Maxim. It was a unique and brilliant experience for all of us. We really appreciate you, your time that you devoted to this, your presentation, and this detailed and thorough analysis of the events and your personal view and position on that. Thank you, just enormous thanks for all that, and hopefully we will continue this kind of communication, yes, dialogue next time. Yes, anything else to say from your part, students?
First of all, really thank you for being with me today and for listening to this type of presentation. I thought that it would be very boring, to be honest. If I were you, I would have never listened to that one.
No, it's not.
So, lots of respects to you. It's really great that you're interested in economy and interested in even the stock market. I know it was a proxy presentation towards something next, right? This was like a sneaky move, right? But at the same time, I think that, yeah, really, really thank you. And thank you for the questions, the very clever questions. And thank you for your English. It's much better than mine, so thank you.
No, you're asking for compliments. Yes,
no.
Surely you deserve them. You deserve them. Thank you, Maxim. Thank you guys for joining, and see you all during our week at our classes and maybe next masterclass with Maxim. Thank you very much. Bye-bye.
Thank you. Bye-bye.
Thank you.
Bye.
Thank you very much.
Goodbye.
Bye.
Bye.